The U.S. Census Bureau released new migration data showing that domestic migration into Florida has collapsed 93% in just 3 years. In 2022, over 310,000 Americans moved to Florida. In 2025, just 22,000. Alabama now attracts more domestic migrants than Florida, and that collapse is dragging home prices down hard. There are zip codes on the Gulf Coast, Cape Coral, Punta Gorda, Sarasota, where homes are down 20 to 30% from peak. One condo in St. Petersburg, valued at over $1 million in 2022, is now listed at $249,000. But the price drops you're seeing today may not be the end. They may be the beginning. Three forces are converging right now. Almost guarantee this gets worse. Florida's insurance crisis, making entire buildings unsellable. America's two largest home builders are discounting new homes $40,000 to $60,000, and the biggest Wall Street landlords in the country are quietly dumping Florida homes at a pace not seen in years. The Census Bureau's latest data shows the outflows county by county. Miami-Dade lost nearly 30,000 people to domestic migration last year. Broward lost over 20,000. Orlando's Orange County lost 15,600. Tampa's Hillsborough County lost nearly 12,000. Pinellas County lost nearly 12,000 total residents, the second highest loss of any county in the entire country, trailing only Los Angeles. International migration used to mask these outflows, but that lifeline is being cut. Florida's net international migration dropped from over 411,000 in 2024 to 178,000 in 2025, 57% decline in 1 year. The Census Bureau projects national net international migration could fall to just 321,000 by mid-2026. At Florida's typical 14% share, that's roughly 45,000 people, nowhere near enough to sustain what's been built here. Florida's entire economic model runs on growth. When migration collapses, everything downstream breaks. Home sales drop, inventory piles up, builders can't sell, landlords can't fill units, and prices fall. There's one more factor nobody is talking about. 1 in 3 Florida construction workers is foreign-born. With immigration enforcement ramping up, the workforce that builds these homes is shrinking at exactly the same time demand for them is disappearing. Zillow puts the average Florida home at $372,755 as of February 2026, down 4.6% year over year. For context, the National Home Price Index is up 2.2%. The rest of the country is rising. Florida is one of only a handful of states in negative territory. The Case-Shiller Index shows Tampa has posted over 14 consecutive months of annual price declines, the longest and steepest streak of any city in their entire 20-metro composite. Tampa is officially the worst performing major housing market in America. But Tampa isn't even the worst in Florida. Punta Gorda is down nearly 12% year over year. Cape Coral and Fort Myers are down over 9%. Sarasota and Bradenton are down 7.5%. Naples is down nearly 6%. Realtor.com projects Cape Coral will fall another 10% to the end of this year, the only metro in America with a double-digit decline forecast. In real dollars, if you bought in Cape Coral at the peak for $436,000, prices rose 75% during the pandemic. That home is now worth roughly $379,000. You've lost $57,000. The statewide condo market is down nearly 10% in 12 months and 13% from the cycle peak, the steepest annual condo decline since 2009. For sellers, 77% of Florida homes now sell below asking price. Only 8.6% sell above. Median time to go under contract has stretched to 58 days statewide, and in Sarasota, it's 95 days. Florida posted the highest foreclosure rate of any state in 2025, with 12 consecutive months of year-over-year increases. Charlotte County, Punta Gorda, has seen a 400% increase in foreclosure filings since early 2024 and now carries the highest foreclosure risk of any county in America. In Cape Coral, 27% of recent buyers owe more than their home is worth. Florida homeowners lost an average of $37,400 in equity last year, the biggest drop of any state. Lennar, headquartered in Miami and America's second largest builder, reported Q4 2025 net earnings collapsed 55% year over year. Gross margin on home sales dropped to 17%, down from 22% a year earlier. They guided their average selling price down 8 to 10% from last year, with their executive chairman acknowledging the market remained challenged even as rates moved slightly lower. D.R. Horton, the largest home builder in America, saw net income drop 30% and is sitting on 20,000 unsold homes. Their chairman confirmed incentives will remain elevated through all of 2026. The incentive packages are staggering. Lenders offering 5 one-arms at 3.75% in Central Florida plus $30,000 to $40,000 off in some communities. D.R. Horton is advertising 0.99% introductory rates. LGI Homes is slashing $50,000 off move-in ready Orlando homes. 2/3 of all builders nationally are now doing rate buydowns, creating an effective new construction mortgage rate of about 5.27%, while existing home sellers are stuck above 6%. If you're trying to sell your Florida home right now, you're not competing against the house down the street. You're competing against billion-dollar companies willing to lose their entire profit margin just to keep moving inventory. The NAB Builder Confidence Index stayed below 50 every single month of 2025. Building permits in Lee County, Cape Coral, plunged nearly 28% in December alone. The builders see what's coming. They're not building into strength. They're liquidating into weakness. Florida homeowners insurance averages between $7,100 and $8,300 a year. The national average is $2,500, meaning Floridians pay 181% more than the rest of the country, with premiums up nearly 70% in 5 years. There is some stabilization. Citizens Property Insurance has shrunk from 1.4 million policies at peak to about 395,000 today. 17 new insurers have entered the market, and Citizens just approved its first rate decrease since 2015. But in the condo market, the damage is structural after the Surfside collapse. Florida passed laws requiring structural inspections and reserve study for buildings 3 stories and above. As of January 1st, 2026, associations can no longer waive reserve for structural components. 40% of Florida condo owners have faced special assessments in the last 3 years, some absolutely crushing. One building in North Miami assessed owners up to $134,000 per unit. A building in Aventura hit owners for up to $400,000 per unit. Monthly HOA fees in Miami high-rises jumped nearly $500 a month in 2025, with some buildings now charging over $2,000 monthly. Over 5,000 properties now sit on Fannie Mae's mortgage blacklist because they haven't met reserve requirements, meaning no conventional financing, cash buyers only. Think about what that does to your buyer pool overnight. Condo inventory statewide has swelled to over 13 months of supply. Listings surged 37% in a single year. 43% of condo sellers have cut their asking price. Half of the top 10 U.S. metros with the most unsold condo inventory are in Florida. If you own a condo in a building that hasn't completed its structural reserves, you're sitting on a rapidly depreciating asset with a shrinking pool of potential buyers. Redfin's Q4 2025 investor report shows investor home purchases in Orlando dropped 16% year over year, the biggest decline of any U.S. metro. Fort Lauderdale fell 15%. Jacksonville dropped 7%. Nationally, 9.2% of homes sold by investors in December sold at a loss, up from 7.1% a year earlier. These are sophisticated operators with full data teams, and they're taking losses to get out. The largest institutional landlords, Invitation Homes, Progress Residential, American Homes for Rent, First Key Homes, have been net sellers for at least 6 consecutive quarters, a year and a half of selling more than they buy. First Key is the most aggressive, with over 1,000 active listings cutting prices an average of 10% off original ask and reducing every 20 days. Some operators in Miami and Tampa are selling 4 homes for every one they purchase. Invitation Homes owns about 24,000 homes in Florida, 32% of their total revenue, and reported Florida's same-store operating income declined in Q4, while new lease rates fell 4.1%. American Homes for Rent said new lease growth turned negative in January. The reasoning is simple. Rents aren't holding up relative to what investors can get by selling, so the better risk-adjusted move is to take the cash and walk away. When these institutional players dump thousands of homes onto a market that already has record inventory, builders slashing prices $50,000 to $60,000, and condos sitting unsold for 13 months, it creates a compounding effect. Every new listing pushes down the ones already sitting. Sellers undercut each other. Appraisals come in lower. Buyers see the trend and wait. The whole thing feeds on itself. If you bought before 2021 and are staying put, you're likely fine on equity. Focus on your insurance costs. And if you're in a condo, confirm your building's reserves are funded. That's the biggest risk for existing owners right now. Not the market itself, but the carrying costs. Florida's housing correction is no longer a prediction. It's in the migration data, the builder earnings, and the foreclosure filings. The three forces outlined here: insurance making condos unsellable, builders slashing prices to survive, and Wall Street heading for the exits are going to keep pushing prices lower through 2026.